is now the time to buy gold?
Well, that's a tricky question. Most likely, if you were to project yourself into the future 5 years and look backwards, you would say, yes, today is a time to buy gold. But if you project yourself into the future only 1 year, you may not think so, because gold has gone up for quite a long time. Now it's at levels where it's no longer a clear bargain. It's not a gift anymore. Now it's a much more difficult decision to make about whether to buy gold, when to buy it. And it could be, the chart that we're looking at right now is the chart of U.S. consumer debt. And as you can see, U.S. consumer debt built up from World War II all the way until the year 2007. And in 2007, the great deleveraging, or what we call the Great Correction, began in America. Based upon just simple math, it looks to me as though that correction has a long way to go. The U.S. has about 3 times as much debt as it can handle safely and comfortably. So typically in a major deleveraging period, you would expect that deleveraging would happen. You would expect that 2/3 of the consumer debt in America would go away. Now, if 2/3 of the consumer debt goes away, you're going to see a long, deep recession, slump, off and on, very similar to the kind of recession that Japan has suffered for the last 20 years. And in that circumstance, you see declining stock prices. You see declining house prices. We are clearly seeing a decline in U.S. housing prices. Stock prices, not yet, but I think we will see it. And when those asset prices fall, people become scared, and they look for safety. And where they typically find safety is in U.S. bonds and in the U.S. dollar. In that circumstance, especially if that circumstance is widespread, and maybe not just the U.S., but Japan, China could easily have a blow-up. We could easily have serious problems in Europe. And those things tend to drive people away from what they consider speculative investments into more solid investments, which typically, traditionally, have been dollar-based investments. So if that happens, and it could well happen any time now, it could happen tomorrow. If that were to happen, we could easily see a sell-off in the price of gold. The price of gold could go down 20%, 30%, 50%.